Hello, my name is Representative Pam Powers Hanley, and I represent LD9 in Tucson in the Arizona House. Well, today's video is about two bills that we just heard in the Commerce Committee. One of them is 1379, and it is about short-term vacation rentals, and the other one is 1720, and it is about peer-to-peer car sharing. So both of these bills are regulate or try to regulate you renting your stuff to other people. 1379, the short-term vacation rental bill, is about you renting a guest house or a room at your house, or perhaps your entire house, and how that is regulated. 1379 used to be stronger. It had a occupancy rate on how many people could be in a short-term vacation rental. Some people are renting entire houses to groups of like 20 or 30 people to just have a giant party, and it's destroying neighborhoods. And so I think that 1379 was better when it had the occupancy levels on, because that's what a lot of people are complaining about. It does give cities and towns a tiny bit of regulatory authority, but it definitely doesn't go far enough. And so 1379, I voted yes in Commerce, but I think that we should go farther. And in fact, I like the original version that did have occupancy limits on it. 1720, about peer-to-peer car sharing, this has been around for a few years, and I voted no every time. My main concern is about the insurance, and so I think that there are consumer red flags for 1720. So I asked several insurance questions in committee today because I wasn't sure exactly who is buying the liability insurance on the car that is being put up on a platform for rental. And so it looked to me as if the peer-to-peer platform was going to sell insurance. But I wasn't sure if they were supposed to have the insurance on the car, or if the person who's putting their car up is going to have insurance on the car. And so the answer to my question is sort of all of the above. And so it seemed really complicated. And I think that it's a big red flag, especially for the person who is putting their car up on the platform. They might have a policy, an insurance policy on that car that says they can't do that. And so they're going to have to dig around in their insurance policy to see if there's some sort of a criteria that's in the insurance policy that says, if you put this on peer-to-peer car sharing, we're not going to pay for it if it gets wrecked. So you have to dig around in your policy to figure that out. You could also buy extra insurance, maybe from peer-to-peer. But again, which policy is in control of this? The other big red flag for me is if you have a car that has a loan on it and you put it up on this platform and somebody else rents your car and wrecks it, then what happens? Does your loan get paid for? Maybe your insurance actually didn't cover your car when it was being shared, and so are you completely screwed on that car loan now? We already know that cars are so expensive, and people, finance so much of the car that it's happening right now. Some people get in a car wreck, and the insurance company says, well, that car is totaled, and what they're willing to give you is less than what you owe on the loan amount. And so I think that this is a real red flag for people who have loans on their car. The lobbyists just said, oh, well, they should check with their bank. Well, call your insurance company and find out, or call your bank and find out. It's like an entire day to get somebody on the phone at an insurance company or a bank. And so lots of red flags. I was the only one in committee who voted no on 1720, but I still think that they need to figure out this insurance angle. There's way too many loopholes. The peer-to-peer car sharing platforms are going to make money on this, but is it really going to be good for the person who is putting their car up on this platform? Yes, they could make some money, but they also have quite a bit of risk, and it's very unclear what their circumstances would be with those two. So 1379 doesn't go far enough, and 1720 I think needs more work.